Hi there, welcome to Grain TV. I'm Kevin McNew. It's Friday, January 6th, and a down day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn and wheat losing 2.5 cents a bushel, but beans getting crushed, losing 17.25 cents on really disappointing export sales. We'll talk about those here in a sec. But first, let's start with some other news. The weather in northern Brazil looks to be improving. Dry spots in that part of the country are expected to see some rain, so the weather models are confirming and in fact extending some of the rain coverage into that northern part of Brazil that has been somewhat dry. In Argentina, it still remains wet. There's delays in planting going on there, but overall the market continues to expect any sort of problems in Argentina are going to be offset by booming production in Brazil. And so, we're still looking for record large production of corn and beans from South America this year. And also coming down the pipe next week, we'll have the January crop report from USDA. But in the meantime, we did have Informa coming out with some new numbers. Those numbers showed better than expected wheat production in Argentina at 15 million metric tons. In terms of in terms of Argentinian soybean production, they peg it at 55 million, off from last month's forecast of 56. And corn, they shaved a little bit to 36, just off from 36.5. So they are looking, Informa at least is looking for a little bit of a reduction in Argentinian production as a result of these weather problems. But like I said, the trade overall is looking for a rebound because of the near ideal growing conditions in much of Brazil. The real news today, though, was the export sales, or should I say the lack of export sales that came out in the weekly report from USDA. Let's take a look at what USDA said. The shockingly low number for soybeans, 87.5 thousand metric tons versus 800 to 1,200 that was expected. That's a 90% reduction below expectations and a marketing year low. So that just clobbered the soybean market today, giving us the 17-cent loss and setting the stage for a probably dismal week starting off on Monday. Also negative was corn, coming in at 429 versus 650 to 950 expected, and wheat coming in just below expectations, but still somewhat disappointing at 183. There was some good news in wheat. There was a flash sale announcement of 100,000 metric tons of hard red winter wheat to unknown destination, so that was certainly supportive. But overall today was really about the bean market and the bean market getting pummeled. Before we get into the technical look at soybeans, let's talk about basis levels. We've seen some modest improvements in basis over the last week, really only a reflection of light farmer selling and weakness in the futures market. Nothing really staggering here. If we look at corn, up 1 cent on basis overall across the country. Not really any strong pockets other than maybe southern parts of the Midwest. Most plants were pretty stable over the last week. In beans, there was a little bit more strength, especially driven by crushing plants who were more sharply or were more tended to be more aggressive in bidding up basis versus river terminals where you see red pockets along the Illinois River, the Mississippi River, stretching all the way down to the Gulf, where basis levels were actually weaker. So overall, the basis picture is pretty flatline, only sort of responding to when pipeline supplies get sort of low and farmers selling dips off, but overall no real sort of strength in the basis. If we look at like areas of Indiana where they're usually seeing strong basis or positive basis this time of year, we're not seeing basis levels above zero, which historically are normally true this time of year. So overall, a very sort of disappointing basis situation, just a reflection of very, very strong pipeline supplies. And I think in particular corn, farmers have been holding tight to and continue to hold tight to. So I think any sort of rally is going to, need to or any sort of rally is going to be met with sort of pipeline supplies being pushed forward. As we look at November soybeans here, I think it's starting to get to be critical decision time. We talked about this at the end of 2016, that we think the soybean market's going to be primed to move lower, and we're starting to set the stage, I think, for next leg down. As we look at November soybeans trading around 985 today, This is at the low end of the range where we were about going into the Christmas break, but we're getting dangerously close to what I would consider support at 975. And once we break that, I think it's a quick move down to 950, and the low on this November bean chart around the 910 range. So, I wouldn't be surprised to see us start taking out some of these key support levels. The news today was certainly bearish, certainly a warning sign that any sort of elimination of China from the export program in the U.S. leaves no one else to buy beans and really no sort of underlying support. And that today, I think, was the first sign we had that China is starting to turn their attention to South America in an aggressive way. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com, take a demo of our trading platform, and get our morning comments every day. Have a great weekend. We'll talk to you on Monday.